Here's your 6-step plan to charitable giving. If there are causes you care about and want to donate to, having a strategy can help you boost the impact of your donations. Let's talk about 6 steps to plan your charitable giving. Number 1, first and foremost, you're going to want to define your charitable goals. What are the causes that are most important to you? What organizations or groups align with your values? What kind of change do you want to help create in your community or greater area? Do you want to give back or help people less fortunate than you? Maybe it's education or arts that you're most passionate about. Giving to causes close to your heart not only feels good, but it could help you engage in ongoing long-term giving. Step 2. Before you start giving, you'll want to fully assess your financial situation. How much giving actually fits into your overall financial plan? If you haven't already met with your financial planner to determine this, start there. Then you can start to lay out an annual gifting plan, which can be adjusted as your situation changes over time. If you have a higher income earning year, to get a larger tax deduction, it may make sense to make a larger contribution or to group several years' worth of giving and fund something like a donor advised fund, which we'll talk more about. Step 3, choose the appropriate method of gifting for you. You can gift directly. Direct donations are very convenient and straightforward. You can give cash or assets directly to an organization. You could look into donor advised funds. These can be set up to really maximize the tax benefits of your donation. You can gift an amount to the fund, choose how the money is invested, and then issue grants from the fund to the charities of your choosing. Because you can invest the money before it's directed to your chosen organizations, the donor advised fund gives you the potential to gift more over time than you've actually contributed to the fund. There are also private foundations that can be established if you're looking to make a larger charitable donation. There are costs associated with creating these, but they can give you greater control over investing the money and the distributions allowed. There are also significant compliance and reporting requirements, which require an attorney and a CPA. So again, they're really only going to make sense if you're giving away a sizable amount. Step 4. Look to maximize the tax benefits. Charitable giving can offer advantages in addition to supporting causes that you care about. In order to get a tax benefit for your donation, you have to itemize your deduction. If you won't have enough itemized deductions to benefit from this, you could consider grouping a couple years of donations in one year to get a larger deduction. If you're over the age of 70 and a half, you can gift directly from your IRA. It's called a qualified charitable distribution. If you do this, you don't actually need to itemize in order to get a tax benefit. And then once you're over age 73, these qualified charitable distributions also help you meet your required minimum distribution requirement. You could also gift appreciated stock. You get the deduction for the full value of the asset donated, and you also avoid paying the capital gains tax on the appreciation of the asset gifted. There are some limits to this benefit, so again, you'll want to work with your financial advisor to make sure you're maximizing the potential tax savings. Step 5. Involve your family members and consider your estate planning. It's important to communicate with your family members about your charitable priorities. Sharing your values with your kids can help instill those values in the next generation and create a family legacy that will continue after you're gone. Both donor advised funds and private foundations also offer ways to include family members in the ongoing gifting decisions. You can build your gifting strategy into your estate planning as well. You may want to name charities in your will or even set up a charitable trust. A charitable trust allows you to benefit from the value of an asset during your lifetime, but leaves the remaining value of that asset to the charity upon your passing. You get a tax deduction now for a portion of the value of the asset when you set up the trust. Step 6, vet your charities. There's over 1 million American nonprofits, so it's important to vet charities before you donate. You can learn about an organization's financials by doing a tax-exempt organization search on the IRS website. In addition, charity rating organizations like GuideStar by Candid or Charity Navigator can provide deeper insights about an organization's transparency regarding leadership, salaries, programs, and more. Navigating all of this can be tough, but planning ahead will help you make the most of your giving. And once you've tackled these 6 steps, you'll be ready to start giving to the organizations and causes that mean the most to you. If you'd like to see how a charitable giving strategy can fit into your overall retirement plan, contact Pure for a free financial assessment.